G'day, I'm Pete Seligman. There are a growing number of people thinking about buying a business in this region, but it can be hard to see what that actually looks like. So to help bring one part of that process to life, I've teamed up with my mates Jason Andrew and James Frank to throw some businesses on the table and share our raw thoughts on each. This is ETA Downunder. We hope you enjoy it.
All right, so courtesy of the team at Morgans, we've got some opportunities to have a chat through. Pretty interesting, I think. I've selected some businesses that I think will stretch the kind of self-funded searcher, the guys looking at getting into something, and then maybe if you've got a bigger ticket across some interesting, what I call traditional and non-traditional sectors. So this is my first one, which I thought super interesting. For the immediate things that stood out, asking price, expressions of interest. I don't quite like that, but anyway, that's sort of frustrating. But I can understand when we start to get down. I think it makes sense. So
because is that another way of saying I don't know how much this business is worth? Is that what they're saying?
Yeah. Why don't you tell me how much?
I think it's the kind of sellers going, "Hey, get me what you can, and then we'll decide whether it's for sale or not." And the bloke is like, "Yeah, sweet. Like, let's see."
Market sounding. Yeah.
So, playground marking company with circa 40% net profit margins, Victorian-based in the construction space. Although I don't want to question how much is actually, construction, but we'll construction. So, playground industry in Australia encompasses the design, construction, and maintenance of outdoor play spaces tailored to children's recreational and developmental needs.
First, it says playground marking. Does it literally just mean the marking? Because we'll find out obviously when we get further down. But always talk about getting a niche business. That's niche. That's we don't do playgrounds. We don't just all we do is the ground markings, and all we do is playgrounds. That's
my kid's school just had its whole area redone because trees ripped up all the asphalt and stuff, and so they laid all new asphalt, ripped out trees, planted new trees, all that sort of stuff, and then marked it. So handball courts everywhere. And I have to say, I never thought that someone's doing that. I just thought, slap a bit of paint on it or something, but clearly I'm wrong.
So when you say marking, is that like line marking of basketball courts and netball courts and things? Is that what you're saying?
Yeah, but it'll be like James is saying, it's even more niche. It's like handball courts. It's like I'm going to go into an open area playground and I'm going to put in some handball courts, and then I'm going to put like a hopscotch on there and all that stuff. Right?
Right.
So it's like kids' playground. What is the?
So they're not even So they're even building. I read this as construction. I read this as building playground park equipment. No, this is literally line marking for.
That's what it looks like.
That's insane. What a niche business. That's amazing.
Right. So I think that's the nexus. Let's dive in, right? So what they say, and we don't have heaps and heaps of information, but I think we've got enough to kind of see where we're heading here, maybe prove some of the hypothesis. So industry can largely divide into two categories: above ground and on ground, and may cater to everything from schools to childcare centres to councils to private play. Again, I didn't even think about childcare centres. There's a lot of them. Business is ridden through the difficulties of trading through two heavily COVID impacted years. Dan Andrews, I think, would be the person you want to that. And has now reopened, or is now reaping the rewards of having low overhead, high margins, strong processes, and the fact that they're disrupting the industry with a superior product offering. Business is run by a husband and team wife. I think that might impact margin, given the structure of the business means that they're both replaceable, minimal trading, and no requirement for any industry expertise or skills. Business currently has a huge pipeline of contracted work and would benefit from growing the team to realise the profits, low expenses relative to a business generating this revenue. There's plenty of cash generated to realise growth and expansion. It's an unfortunate family circumstance, that brings this business to the market. So the genuine reasons for sale of the business, a great investment for an ambitious couple or a strategic purchase for those within the industry.
Look at that revenue change though. 22, 2.8,
Yeah.
6, 7.1.
That's why.
Yeah. I'd like to know what the business was doing pre FY22.
Yeah.
Yeah. Was it back at the 6s or the 5s, or was it like, is this only business 4 years old? I don't
Crazy.
know. Not to say it's a bad thing.
It's a big change, though, isn't it?
That's insane.
Hi everyone, I'm Pete Seligman. Thanks for registering your interest in the 2024 ETA Forum. This is the third year of the event. We started at the beach, we moved to the harbour, and now we're taking it to the heart of the city, and we're really looking forward to having you there. In return for your earlier interest, we're giving you access to discounted tickets for the next few weeks, so please follow the link below and grab them while they last. In the month of May and into June, we'll continue to release more information about the event and all the exciting things to come. So please let me know if you have any questions. Looking forward to seeing you there.
So a couple of things, like disrupting the industry with a superior product offering. Like, what are these folks doing differently? Like, I don't know line marking, but what, paint, maybe a couple of rollers. Like, I don't know. I shouldn't have some sort of machine, but I wouldn't think that machine would be too different to normal line marking machines for roads.
Yeah, I reckon this is one of those awesome examples of where you take actually a fundamentally very commoditized trade, sort of, so to speak, and call it specialized because you take it into an industry vertical, right? So the same guy that's walking up and down the road outside the public school doing the line markings for the parking spaces or whatever is charging half as much as these guys, because these guys are playground specialists. And so when they go into the school and they draw exactly the same line using the same paint, the same technology to make a handball court, the revenue per meter of line painted is twice. I reckon it'd be something like that.
Yeah,
it's an awesome thing to do, right? Like, there are so many different opportunities to do exactly the same thing. You know, it's the same trade, same commoditized, whatever. It's like, I mean, it happens in every trade business, right? You look at electricians and plumbers and all that sort of stuff, put them into a different sector or make them specialize, you know. Yeah,
but it's every services business, really. Every business. Yeah. I mean, like, talk about, hey, we offer accounting services. Okay. Yeah. We offer accounting services for digital agencies. Okay, cool. We are accounting services providing, especially on digital agencies, to help them maximize their profit and minimize their tax. Like, you know, the further you niche, the higher your hourly rate goes. And this is, the same example. What a fascinating business. There's not much else, not much detail in there.
No, there isn't. I think, but I think to your point, Jace, like FY22, right? Okay, COVID impact 2.8. It's still
pretty good. Yeah, just 15 million at the bottom. Yeah. Do you think they're relying on contractors? You think, like, how are they actually doing the work?
So that also is interesting. It'd be good to know what the headcount is and what the contractors are like, because again, like, I wonder. This is like one of those McKinsey questions. How many meters of line would you need to paint to make $6 million worth of revenue? Can't even trying to think, you know, what that might cost. You know, is that a like $2,000 a day worth of work? You know, if there was a day-long job for line marking, is that $2,000 a day? Is that $5,000 a day? You know, like, if it was, even if it was 5,000 a day, that's 1,000 days, right? Worth of work across 252. So it's like 4 operators. Yeah. So it doesn't need to be a massive team, right? So if you could charge out your equipment and your paint and one person operating a machine at, you know, $5,000 for a day's worth of work, you'd only need 4 of those setups to make $5 or $6 million. So it doesn't need to be a team of 20. Could be a team of handful.
Yeah, and even I assume, is line marking like a trade? Is like, do you need to be skilled to be painting lines on roads, or is it like?
I think it's so it's something that I should know a little bit about, because one of my businesses is in the parking sector and does get involved exactly. I don't think we're going to expand into line marking for playgrounds somehow, but we do get involved in painting lines on roads. So I probably should know a little bit more about it. But yeah, I imagine that I'm not sure if there's necessarily a trade, but it is a painting concept, right? And there is a painting trade, and it's pretty toxic stuff, what you need to put on outdoor environments. So you don't just pick it up and have a crack at it, even though I epoxied the floor in my garage one time, but that wasn't a success. But yeah, there's definitely some specialty. It says superior product offering. I wonder if they've got some kind of unique access to a product.
I don't
or something.
Yeah, I don't know about that. I reckon it's your point, Pete. Is just
marketing
niched into a category. And they might have a particular product which you can import it from the US or Europe, which specifically does line marking for handball courts, etc. But
there could be something related to the nature of the paint you have to use in environments that are going to be heavily trafficked by people. It might not be allowed to be as toxic as the stuff they put down the middle of the freeway. So that could change the nature of the product you use, and maybe even the margin you can charge for it. Okay, so what? Yeah.
I think I think if you looked at this on it would be heavily project cost. I think there's this split of maintenance versus project, and how many maintenance jobs related to projects previously undertaken. Because I think there would be an argument to say you could create some repeat revenue. I wouldn't call it recurring in any stretch of the imagination. Certainly repetitive revenue from clients. So the LTV from a client's point of view or customer's point of view could be quite substantial. But just even when you were saying 4 teams at working every day, I thought that is a lot of line marking.
It is, isn't it? But I don't know. Everyone else it'd be interesting to see how the numbers stack up, right? Like, I wonder how they get to 7 million. How many projects is that? I mean, that's the other question. Like, is that like 7 huge projects, or is it like 100 little jobs? But the other thing I was just thinking in terms of recurring work, obviously, like the job that you said happened at your kids' school, James, where they came and kind of redid all the marking. I wonder if they've got a lighter product that's kind of easier to remove, where they can do kind of seasonal stuff, where you could start to sell to the school. You could say, well, as we go into summer, why don't we do a mural on the ground that relates to the changing of the seasons, and you could make it kind of interactive and educational, and we can lay it down. And then 3 months later, we can come and scabble it off, and so effectively you could convert it into a kind of we take care of your ground as a canvas type of situation.
Okay. So the multi-million-dollar question: what would you pay for something like this?
Obviously key person dependent, right? Like they kind of highlight that husband and wife duo. So it's key person risk. I think that if we couldn't look at historicals before FY22, there's always hard pricing businesses with like all the growth is at the end, like, and they want you want the multiple on the last 12 on the FY24s, which is the best month, probably best year the business has ever done. So there's a couple of approaches that I've experienced. Like, one is, let's look at an average. What's the 3-year average, and use that as your normalized FME or normalized EBITDA to then add a multiple to that. Another one is if they're so insistent on the 3.1 as the FME, which any rational seller would be insistent on that. You try to put some earn-out or deferred to cap your downside in case things normalize back to FY23's level, which is less than the 3. So that's how you probably establish a normalized EBITDA as a starting point. That's how I would think about it anyway.
Yeah.
And then apply a number, 2 or 3. I don't know, 2 or 3 times.
Well, I think because if you do very quick maths, your average sits at 2 mil, and so you take the last 3 years at 2 mil. Your margin has been consistent across, almost every year.
Consistent-ish. That's what I was just running. That's in FY22 it was 37%. In FY23 it was 31%. And to be honest, I kind of like the fact that it dropped in that year of growth, because it shows that they invested. Hopefully, it means they invested in some growth overhead.
Yep.
But then in FY24, it goes up to 44%. So, which again, hopefully that means that they then kind of got some scale out of the growth that they made. So, yeah, it's interesting.
So if you take the average and you go, okay, it's 2 mil out the bottom, and assuming that this doesn't include your owner's wage, right? So like you'd have to go to replace them. So, call it 1.75, 1.5, depending on how much they actually work, whatever. Then the question is like this thing here, and I'm not sure if it's a good thing to disclose that or not. I guess in one sense it is, because it sets up, if you're serious, put something forward, it's going to be considered like, let's all get on the same page from day one. And I think that's probably, kudos to the guys marketing this, because I think that makes it a little easier. But I think that will naturally, unfortunately, probably impact your multiple, right? Because the key person dependence probably drops away because someone either wants to leave because someone else is sick or they're sick or something like that. So I think like an interesting sort of hits the niche, but like you're going to have to bring money to the table to get a deal done.
I reckon that also, given the family circumstances, it would mean that they haven't prepared for sale.
Yeah.
And so that probably the best way for them to exit, which doesn't necessarily make a downside for the incoming buyer, but it probably lends itself to a longer earnout period, with a significant proportion of value attributed to earnout, where you say, look, actually, you're not ready to sell. And it literally, if you dump this on the market today on a walk-away basis, you're going to get almost nothing because the multiple is going to be low. You're not prepared for sale. You got huge key person risk. There's volatility in your earnings. Like, you could go through a whole list of reasons why you're not going to apply a huge multiple. Whereas if they then said, we've got this family circumstance, whatever it happens to be, it means that we pretty quickly need to pull back on the day-to-day basis. You're like, that's okay, we can solve that because we can jump in, but actually we're going to pay you value over time as we work out how that works. You to get a better value from them, probably risk mitigate for the buyer as well.
And I think for the right seller, that would be fine. I think if it doesn't like, I don't know what unfortunate family circumstance, but if it's a stage transition, and happy to get their money over 12 to 18 months through the further and then out of some sort. I think most people would probably accept that given the situation, because
it's just the proportion of it though. Might just need to be a larger percentage
100%,
of that.
100%. Good business. It's almost like you see deals like this and you think, if I was looking to get into business ownership, like this is a cracking opportunity. Like, I think one of those businesses that'd be pretty hard to stuff up. You're not looking after people's babies. You're not, driving heavy equipment. You're literally painting lines.
Is that or a great bolt-on for a line marking business? If you're already a business that does line marking, then you could buy this and
100%. If you're doing it on the roads and you've got a workforce that might then cut your contract or subby-contract down, and so if you're doing night work on a road and you go, well, I can do day work at a childcare, then happy days. The thing with this, I imagine every worker has to have a working with children's check and all that sort of stuff. So, you do, obviously, your team isn't just off the street. There has to be, but if you're a simple guy that had, some good line marking businesses, then this is a sweet bolt-on. I like it. It's a good one. All right.
Thanks for listening. I hope you enjoyed it. If you want to learn more, please hit us up on LinkedIn. You can find all 3 of our profiles in the show notes below. And stay tuned for the next episode.